Hello, everyone. Welcome to tonight's live. We're going to be starting soon in about 1 to 2 minutes, exactly 1 minute now. And please bear with me, and we're going to be going live in about 1 minute. Please, I appreciate your time. I appreciate you connecting with me tonight, and I look forward to sharing with you some exciting information that will empower you to take action into preparing your business for an exit in a foreseeable future or in the long run, right? So we're gonna be starting in about 30 or 40 seconds now. And I want to make sure that I'm recording tonight's live to make sure that those who didn't make it for today's meeting, they're gonna have a copy of this, okay? Oh, let me actually go back. Yep, we're still here, starting soon. So we're gonna be going live in a second, anytime now. So welcome everyone. It's 5:30 p.m. Central Time, and my name is Lunta Di La Paulo. I'm gonna be presenting to you tonight on the subject of exit planning for soon to retire business owners. Even if you're not a business owner at the age over 50 years, uh, uh, at the age over 50 years, over 50 years, I would still strongly recommend you to stay with me tonight because what I'm gonna be sharing with you, for a lot of people, they start hearing about it a little bit too late in their business journey, and you can do so much to actually change the course and improve the results for these business owners. So you probably have heard this before, and I'm gonna make sure to repeat it. The key is really preparation. The sooner you begin, the better your chances of improving your results. Okay. So we're gonna be talking about exit planning for soon to retire business owners. As I said, my name is Lunta Di La Paulo. I'm a CPA, a former investment banker, and I'm gonna tell you this. I've been on both sides of the table, from the buy side as well as sell side, advising business owners looking to exit, but also business buyers seeking to acquire companies, running valuations, and on a day-to-day basis, I help small business owners across the US, helping them improve their business result, whether it's accounting, whether it's taxes, whether it's business advisory, right? We're serving business owners across the nation to help them elevate their financial outcomes, okay? So today, just to give us, and by the way, before I go any further, we have a free ebook that you can download at luntadilapolocpa.com/seven exit mistakes. When you go there, you can get your free copy of the ebook, okay? But I just want to give you our roadmap. I try to keep these lives very short, about 30 minutes long, right? The goal is really to give you quality information that you can take on and quickly make progress towards making towards improving your business and therefore getting better financial results. Okay. So for us today, our roadmap essentially it's gonna be the what, the why, and the how around exit planning, right? We're gonna look at what's exit planning and what is not exit planning. When you should begin ideally your exit planning, right? Understanding the importance of exit planning, right? Irrespective of where you are on your journey in entrepreneurship or business ownership. It doesn't matter if you're just starting your business or you are close to retirement. Exit planning is key. And the sooner you begin, I'm going to repeat this deliberately towards throughout, excuse me, the presentation so that you really remember these, okay? And the how, right? The steps you need to start taking today to begin your journey towards exit planning, okay? So let's kick things off with the first item in our agenda. What's exit planning? But before we talk about what exit planning is, we need to get a good sense of what is not exit planning. Okay. Exit planning is not succession planning, although succession planning can also be part of the exit planning. Okay. So what is succession planning? Let's just clarify terminology here to give us a solid ground that we can base our conversation on. Okay. Succession planning is the process methodologies you use, right, to make sure that there is a line of succession in your organization in the event somebody important or key to creating value leaves the company, right? So the idea of succession planning, just think about the line of succession in our government, right? We have the president, we have the vice president, and then we have, I believe, the leader of the Congress, right? And then it goes and so, right? So succession planning is about how do we make sure that if somebody leaves the job, we have people trained in place to replace them, right? And that person may not necessarily, typically in succession planning, it's not about the owner, but the other key members of the organization that needs to be there, right? And succession planning tends to be more proactive, right? You plan ahead of the time, you prepare people in your organization in the event, somebody key leaves, you have somebody who can be replaced quickly. And I also said that exit planning is not and should not be confused with replacement hiring, right? Replacement hiring is a more, how do I put it? It's a more reactive approach when somebody key to the organization leaves and then the organization try to scramble because it didn't plan, right, to try to quickly hire somebody who may or may not be good fit for that role to take over and continue leading the organization. So exit planning is not either of these two, although it could involve some element of one or the other. Okay, so let's now talk about what's exit planning, right? In my mind, as a professional business advisor, right? When I think about exit planning, I'm really thinking about a roadmap. Okay, I'm thinking about a roadmap, right? That helps business owners maximize the overall value of their company, right? To deliver to them their desired outcome when they want to step aside from the company, right? So that's exit planning. That's about creating steps, processes, systems in place that helps elevate the value of the firm, that helps create value for the company so that when the owner is close or ready to exit, they'll actually reap the desired outcome that they wanted to get from that moment on. Right. So exit planning is more focused on the owners of the company, right? Contrary to succession planning that may or may not include the owner, right? Exit planning is really about, okay, if today something happens to me as the owner of my accounting and financial advisor practice, what happens then, right? If I get sick, can I sell my company in the state that is found today? If I need to move to another country, can I sell my company in its current state? If I have to retire today, if a major life change happens, can I get out of the company and still get the financial outcomes that I intended, right? So today we know that in the US, right, more and more baby boomers are close at or already retiring, right? And we know that from the baby boomer group, the vast majority of them don't have enough savings for their retirement. And there is and as a result, most of them who are business owners expect that with the sale of their business, they will get additional cash to fund their retirement, which is great. At the same time, we are seeing a problem because I speak with business owners every single day, and I know what's happening in in the small business community. And here's what is so common across the board. What I'm seeing, what my team is seeing, is the fact that a lot of businesses are not going to be able to deliver the financial outcomes that the owners expect to get when they sell, because most business owners actually do not think about their exit when they start their business. So, and this is very important, especially for those who are about to launch their companies or just starting the process, right? They are just, maybe you are 5 years into entrepreneurship, right? Maybe you're not even 30 or 40 years of age. You're just, right there, maybe, in that, growing stage of your business, right? You haven't reached the plateau or starting to descend the hill. And this is very important to you because it's important to understand that exit planning is not done when you are 50 or after 50 years of age or when you're ready to go to retirement. Exit planning is done at the beginning. It's done way before you start your operations, because your exit planning decides and defines how you build the organization, the company, so that it produces to you, it provides you the financial outcomes that you want, right? So we're going to see an example here in a second, right? What happens when people are deliberate with their decisions, with their choices, right? So again, I'm going to repeat it so that it sticks. Exit planning is about constructing a roadmap that maximizes the company's overall value to deliver to the owners their desired outcomes when they decide to step aside from the capital stack or from running the company or from owning the company. Okay. So if you're a business owner, it's really important to understand that there are few items here that should be catching your attention. Number one is exit planning is about value maximization, right? It's about value maximization, right? Exit planning is not about just selling your company. Please do not confuse exit planning with the process of selling your company, although it includes the process of selling your company, right? First of all, exit planning is about value maximization. How do we maximize the value of the company, right? Because a potential buyer or someone who's going to inherit the business needs to come to a business that actually is valuable, that actually can deliver to them the expected financial return, right? So as a business owner, you need to maximize your company's value. You need to grow it to a place, to a stage where it makes sense for someone to approach it and want to buy it, right? So number one, value maximization. The size of your business matter, right? The operations of your business matters, right? And I also underline the fact of desired outcomes of the owners, right? And it's very important to understand this. If you don't have much savings in your retirement and your business, let's say it generates about $1 million in revenue and you get about 200 to 300K in net income, okay? If your business can be sold at 3 times multiples of your net income, that's about $900,000, right? Would $900,000 be enough to fund your retirement? And by the way, that's pre-tax, right? That's pre-tax. When you include taxes, you could be, well, you know, slightly north of 600K, right? After accounting for federal income tax. And if you live in a state or municipality that also have taxes, income tax. So, that amount can fall a little bit more. So it's really important to understand, right? Exit planning is about looking ahead of time and thinking, when I need to exit from my company, what do I want to get out of it? What do I want to do, right? Do I plan to just close it down and sell the assets? Do I want to pass it on to the next generation? Do I want to hire somebody else to step on my shoes and continue running and I just get the dividends? Or am I looking to sell it, right? And to sell it to whom, right? Third parties, family members, employees, and we're gonna talk about these in future lives. But it's really important to understand that, that desired outcome is very, but very important. And let me give you here the example of three friends who are selling their companies, at exactly three times multiple. And they launched their company in the same year, doing the same thing in the construction space, targeting approximately similar type of businesses, right? 20 years later, they want to sell their companies and they are comfortable with a three times multiple. Friend from company A, they built their company to $2 million revenue. Yes, it's still an impressive number given the fact that the majority of the companies in the US never make it to even $1 million in revenue, right? So if we say at half a million net income, that's about 25%, right? We're looking at a $1.5 million valuation. So if this business owner, let's just say all of them have $0 saved in their retirement account, right? Because they wanted to reinvest in the company. What is happening here? If they can manage to get $1.5 million at the sale, if we say less taxes of approximately 300K, I'm being very conservative here, the owner of company A is left with 1.2 million, right? The question is, would that be enough to support them for the rest of their life if they retire? What are they planning to do after they retire, right? What lifestyle do they expect to maintain after they retire? So there are a lot of questions that needs to be taken into account, but those questions should not be taken into account when you are close to sell. These question needs to be answered through the exit planning process, right? Because as I said before, the goal of exit planning is really to help you, right, create a roadmap that creates value for the firm to help you achieve your desired outcomes, your desired goals, right? If company B got to $10 million in revenue and 2.5 million, we're really just using here 25% margin, profit margin, then the valuation here is at least 4 times, right? The valuation here of company A. And for company C, they have 10 times higher the valuation of company A. So, at zero savings for retirement here, company B and C could be at a much better financial outcomes, right? And my assumptions here is company A and B, they started early on building and designing a company that would yield to them the financial outcomes that help them, that allows them to actually have the type of cash that would give them what they wanted. While company A owner, right, did not build that type of company. So here's why exit planning is so important, because it gives you that roadmap. It tells you what you need to do to maximize the value of your company to help you deliver the goals that you have, the objectives you have when you exit, right? And another reason this is so important is because, when a potential buyer approaches you, if you had an exit plan started early on, it's easier to execute on a good offer. But if you didn't, you wouldn't have a good company that it's even worth selling. But also, you know, bad things happen, unfortunately. Life is full of random stuff. And if you get suddenly sick and you didn't prepare your company for your exit, a lot of this actually happened early this year. I was reached out by a business broker. They said, "Hey, look, we have this business. The main CPA passed away, and the clients are just all over the place. The staff, there isn't really nobody there to step on the shoes of the owner to continue running these." And I try to help them, by considering the option of acquiring the practice, but there wasn't just much to be acquired there, simply because the business essentially revolved, you know operated, existed around the owner. Right, the owner knew how and where to hire, how to hire, who to hire, the staffing, process, the payroll process, the client. There wasn't a business. There was somebody who does, who serves client through the support of other people, essentially. There was very little documentation in place for processes, for clients, and so forth. So, and that just became a very tough deal to be involved to be involved in, excuse me. And I had to let it go, sadly. And I hope, the clients found other professionals, to help them. But that's really the reality. So if you are a business owner and you're not preparing your company for sale, you could be in a position, a place where, if something not ideal happens, and the next day you no longer have a business, and therefore the value you have created and built, and maybe you wanted to leave for your family, or even sell to harvest some cash for your retirement, could be lost in a blink of an eye. So from business owner to business owner, I would strongly advise you to consider exit planning for your firm, for your family. Okay. Let's move on. So, as I said, it's important to begin with the end in mind, right? We need to know where we're going, what type of business we're looking to build, and how do we exit from that business when the time arrives, or if we are forced to exit, whether it's by life situations or circumstances, or you know something out of our control happens. So very important to consider. And I said the last point is around the how. The how is really about preparation, right? It's about preparation. If you don't prepare your company, if you don't prepare your business for your exit, you are more likely to lose value, right? The sooner you begin, the better. Some statistic tells us today that business owner who prepare at least 3 to 5 years before they exit or they sell, they tend to receive at least 20% more value than those who didn't prepare. So the farther you start preparing, the earlier, excuse me, you start preparing, the better, because then you'll be, addressing very important questions. Things like, who's gonna be your ideal buyer? If you intend to sell, how do you plan to transition the company, right? What are you planning to do after you sell the company? Or once you exit the business, right? Are you planning to travel? Are you planning to start a new venture? Are you planning to maintain your current lifestyle? Are you planning to downgrade or upgrade your lifestyle? You know, what are you planning to do uh, finance-wise? Okay. What type of deal are you open to, right? What transition phase looks like? Are you planning to stay around, or are you planning to continue to just leave immediately, right? Um, and the other part of the sale process, how do you prepare for the due diligence, right? It's very important for business sellers to understand what is that process looks like if I'm gonna sell the company, right? Step by step, what are the key milestones? By the way, we're preparing a course to teach business owners what is that business sale process looks like, right? So that you're not caught off guard and nothing is gonna look new anymore to you, right? And how do you can increase your value just by being a little bit better prepared than the typical business owner who doesn't have the information to prepare or know the M&A process, okay? And especially around the tax implications, right? The sooner, the earlier you begin your preparation journey, the better for you. Okay. Who's gonna be part of your deal team, right? Are you gonna need accountants, M&A attorney, M&A advisor? What are the key issues that you need to address in your company before, you know, starting to consider selling it, right? So there is a lot of things that needs to be considered, needs to be done, right? So I'm gonna give you an example. One thing we do for clients is to help them achieve certain milestone before they consider selling their company, because based on our experience, we know where you need to be to attract certain types of serious business buyers, right? If your business is below 500,000 in sales, you're not gonna be able to attract top type of clients, right? Of buyers, excuse me. And different type of buyers have certain deal structure in mind. They will have different type of strategies. They will be, looking for different type of factors in your business. Some will be willing to pay more or less depending on where you are on your business journey, right? So typically, if you want to be dealing with very serious business buyers, you need to get your business at least at $1 million earnings, right? That's not revenue, that's earning. Meaning, if the average business in the US generates about 20 to 30% profit margin, then your business, on average needs to be at $5 million in revenue. However, there are some incredible business out there that are at $3 million in revenue, but they can make about $1 million in earnings, right? There are business like that out there. So I think this is probably a good place for us to pause. And if you need any help, if you need any additional information, right? I deliberately skipped the last slide, but I want to give you our information here. If you need help, if you need to get in touch with us, again, there is a free ebook here that addresses the 7 exit mistakes that business owners seeking to exit make that cost them a fortune. You can get that ebook here at luntadilapauloCPA.com/7exitmistakes, or you can reach out to us at hello@7exitmistakes.com, or simply by calling or texting our phone number here at 773-937-1264. And again, it's been a pleasure being here with you today, and I look forward to staying in touch. Please let me know if you need any help, and I'm gonna be here on the other side, waiting for your outreach. Okay, I'll see you soon. Cheers.